Welcome to another episode of the Lightspeed Investing Podcast. Today we have Paul H. Graham back with us again. He is a business professional in the oil and gas space, specifically owner of a alternative investment company that not only allows people to get into the oil and gas space, but he also helps CPAs enhance their skill set around this type of topic. So, Paul, I'm super happy to have you back here as we're going to dive into the nitty gritties of your space
Yeah.
and have you educate our audience on some very top level stuff, maybe for you, but for them, it will be new. And I'm excited about that.
Yeah, I mean in some ways like it's also not new to me, but it is top level too, right? So my
Hmm.
background initially was commercial real estate, then I've been in software and finance technical type products, and then now kind of in the capital market space, alternative investments, working again like you said with CPAs and with investors. So why that matters is I don't have a petroleum engineering degree. I don't have
That's
like a
right.
formal finance degree. And so my business partners do. And so sometimes they say really big words and sound super smart and it's just so great. And it's like, what's happening, right? So I
Hmm.
like to say that I'm able to understand oil and gas where it's like I put gas in my car, right? I don't have an
Yep.
electric car, at least right now. I have a gas car. So basically breaking things down to that sort of level where really anyone could understand. Because really that's then the opportunity, right? So a lot of people see Facebook ads, right, as it relates to oil and gas. And there's a number of different like behind the scenes things that you wouldn't understand, right? Like for example, we were on a call, earlier outside of the podcast, and like one of the companies mentioned, like they're actually a debt fund. You actually don't own part of the oil and gas company itself. And truth be told, they're actually just two private equity companies that basically are, way undervalued or well, I guess overvalued in some aspects, being that, that company is going to go down and then the other company is going to buy it for basically pennies on the dollar
Hmm.
and the retail investor really isn't going to be benefited from that transaction, right? That's not
Hmm.
something that you would want to hear to invest in oil and gas, right? And not to say that's like typical or a one-off, it's kind of in the middle. So one thing that I wanted to talk about today is really just on, operators. Like how do you understand which oil and gas operators you should invest? And
Uh-huh.
granted, like should you even invest in oil and gas at all?
Okay. Well, and before we really dive into it, what are the three big teaching points that you are going to essentially we are going to dive into so that we have a like for the audience, right, a proper structure as
Yeah.
they listen to this episode.
Yeah, absolutely. So we're going to go through first, like, how do you understand operators, right? And then,
Okay.
like, the types of investments. And then also, if you find the right type of investment within oil and gas, well, then does your CPA actually understand how to take that into account? Because that's, like
Right.
I mentioned, a big thing that comes up where ultimately CPAs just don't actually know. And so, even if you do say the right thing for you with investments or tax, you want to make sure the CPA, puts the right things in the right places, or transparently, you probably need another CPA, especially if you're doing some of these complicated things, right? Like trading, like real estate, like oil and gas. So,
Absolutely. All right, man. Excited to dive into it. So first topic is comparing, right? How do you actually invest into a fund directly, right, versus the operators?
yeah, for sure. So these are different, and there's number of different nuances. But again, let's just make this like meat and potatoes, something you could tell, someone in third grade, right? So there's funds, which basically are typically going to do several different types of oil and gas operations and leases. Direct could be leases, right? Again, several wells, or it could also just be single projects, right? Now, funds typically don't have single projects, but sometimes they do. At the end of the day, it doesn't really matter. What actually matters is this: like, one, how can they market and find people, right? Investors.
Mhm.
And then the other is going to be, do you actually own part of the project itself? Or is it part of, some sort of entity that also then owns those wells? So those differences are going to be in some ways related to tax as well as kind of the cash flow and sort of the waterfall model, which basically just means how the general partners, so the people who are kind of like running the fund or running the deal, are getting compensated, and then like you as the investor. So Tends to depend, right, if they're monthly or quarterly type of distributions. Now, keep in
Hmm.
mind, there's also five different types of oil and gas investments. There's what I call poke a hole in the ground, which in geological terms, if you will, is called wildcatting. That is basically risk, exploration, right? That's not something that I or we at Sandstone Group, where we look to allocate funds within the oil and gas space and help analyze oil and gas deals. We don't go for those types of opportunities. And so, keeping in mind that there are different types within oil and gas is really the first kind of big takeaway. And then again, second, like you mentioned, there's funds and direct. Again, they're going to give you different types of abilities to offset your income, even active
Hmm.
income. So you could have a really high paying job, invest in oil and gas, offset that, and then also get cash flow. Obviously, it's diversified because this is probably the first or second time you've invested in oil and gas. But this is also completely different than stocks. Stocks in the energy space, like you're not going to get the cash flow, you're not going to get the tax deduction, et cetera, et cetera, et cetera. So those are the two different types. Again, they have some nuances between them, but ultimately it's just depending on what you feel the most comfortable with. Funds tend to be or are regulated right by SEC. Direct is kind of just like a hey, we have a company. Do you want to invest in it? We've been doing this for 30 some odd years. There's still great opportunity with that, but obviously you want to analyze it like you would anything, to the degree of scrutiny to ensure that it fits within your risk tolerance, your buy box, et cetera, et cetera.
Well, in general, right? Like, what would you say is considered to be the more risky? And if it's more risky, you can probably get more ROI from it, right? Like when you compare and
Yeah,
contrast the two.
I mean it's really going to depend basically. Like we're working with a number of companies who are both direct and who also are funds, right? And so when we think of risk, we think of one structure, we think of two, the operating team, right? And we can go into operators, next. But the other piece is also the projects and the type of projects. Again,
Hmm.
those five different types. And if they're single well or if there's multiple wells, again, those kind of like nuances. For the most part, I would say like if you traditionally like to just go to like Charles Schwab sort of brokerage platform and you're just like, hey, I just want to get my K1, I want to get my stuff, I just want to look at it, I want to see the documents, everything all pretty and organized and straightforward, funds are probably going to be your way to go. If you're
Hmm.
really open to things not being as organized, but ultimately there's still opportunity. Direct is going to be, and it tends to be that direct isn't going to have as much sophistication, but that also means it's going to have maybe not as much care, right? So maybe it's a solo operator who's trying to do everything versus a fund, which is like several people who are working on it, who are probably well established, in the industry and are more formal. So it just depends kind of on the investor and the tolerance. But I would think the bigger thing when people think about risk is ultimately going to be the deal itself, not necessarily the structure, right?
Right.
Because that's
Right.
ultimately at the end of the day what you're investing in. If they still send you, your K1s or 1099s, like I mean, you're pretty much gravy, right? But really, those returns, I mean, that's really what's going to separate the oil from water, right?
Gotcha. Okay, awesome, man. Thanks so much for that clarity and sharing that there's two ways that you can do it, right? Either directly or through a fund.
Yeah.
Which now leads us to the second topic that you want to discuss today.
Yeah. So just really thinking about operators, right? Some of the biggest things, and this is true not just of oil and gas, but like syndicators, and fund managers, the alike, right? So first is like the operating team, the people. It is my recommendation, at least, right, that you do background checks on all the operators and the managing principals, right? For just sheer thought process. There have been times in deals
And
that
due diligence, basically, yeah.
yeah, and there have been times either through mine or like different entities that people are just resistant to that, and it's just like, hey, kind of yellow flag or sometimes even red, right? So first
Sure.
do the people, then it's going to be the deal itself, and that's pretty straightforward, right? Everyone's interested in the deal. Hey, what's the deal, right? Really, the difference maker specifically in oil and gas, and granted, this is also true within real estate, but specifically oil and gas, it's a commodity, right? So in real estate, you can't just kick out a tenant for, 2 weeks because they're willing to pay more and then bring them back in, right? But with oil and gas, it's a commodity, the market's changing. So if you have the ability to change also the flow of oil, that's going to be different, right? So really understanding not just does the operator know like the price for barrel of oil and when and how the reserves of the oil that they have found within that drilling area, but it's really just more of like how do they think about when and how they change the operations based on price, right? Also, who's on their operations team? Often everyone looks at
Hmm.
the like managing team, but not
Sure.
necessarily those that are actually like on the ground actually flipping the switch, right? So kind of like with real estate, right? You have the property managers and on the GP team also tend to be, the ones actually doing the work. In oil and gas, typically the person who's maybe leading the fund or is owning the company isn't necessarily going out and pushing the buttons in the field. Now, they should
Hmm.
oversee it by all means, like any good CEO would. But again, there's so many kind of nuances with it that you just want to, again, ask those questions in more depth with operations than you would really with real estate, especially since it's kind of a newer asset. And there's a number of different, resources I have for people on some of these nuances. But again, these three things are really just going to
Sure.
separate you to make sure you don't just buy something off Facebook.
My biggest question though is obviously there's and especially around this space already limited information online.
Yep.
So, how do you go about doing the due diligence to where you get the proper information on something as granular as the quality of the operations team?
Yeah, so a couple things come to mind. One, so operations wise specifically, that's a little bit more of like individual due diligence. Now, something
Mhm.
at Sandstone Group, like we do due diligence projects specifically on operators and on the deals themselves, right? So that's a paid service. Now, if
Hmm.
you're just like exploring YouTube and you heard about oil and gas and you're like, how do I do this?
Yeah.
Resources in kind of the multifamily space tend to be the best.
Uh,
There is a book. I think it's called like how to raise capital or something. But anyways, in that it kind of talks about um, the different nuances and things to think about with the management team and things like that. And then, of
yeah.
course, with the actual oil and gas investing, I mean, that's something that I'm really passionate about and my business partners are passionate about. So we have like YouTube videos on Energy News Beat, on like Mike actually going through an oil and gas deal, like being like blah 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 blah, right? For really technical. I have my oil and gas ebook on my website, Investor's Guide to Joy slash oil. I think it's like dash gas, but basically just go to the
Mm,
website and you can, hit investing and find oil. So those things have the ability to kind of fill in those gaps. But it's really dependent on your experience as well as your willingness to go into the weeds. Like how much information do you need to know to make a decision with an investment in general, right? Whether it's your industry or not. The biggest thing is just seeing if it aligns with your values, with your buy box, and then of course, these things we talked about: people, the deal itself, and then the operations,
yeah.
and also talking to previous people who've invested. That's another good way too.
Right. But the biggest takeaway that I got from it was you can reference family offices that are maybe in
Mhm.
close proximity to that company, right? And to get more resources and information out of them.
Yeah, I mean, family offices are good in a lot of ways. I think there's a couple thoughts that come to mind. One, all the investments they do aren't necessarily like public, right? But
Hmm.
the other thing is, depending on the family office size, granted, they may not be with other investors.
Hmm.
Those that are at the $1 billion plus do things themselves. Those at the $100 million plus are willing to like negotiate and work with you, but they're on their terms. Those that are
Hmm.
at the kind of like 20 or 50 million may have the confidence of the 100 plus million, but are really, more of the private placement and they're willing to put funds in, but they're not willing to like completely allocate. The biggest thing, and kind of like with oil and gas in general, is just like it is private equity just downsized, right? So, for example, we've looked at purchasing a number of different projects that are at like the 2 to call it 12 million, like underneath the private equity kind of threshold, essentially. And a lot of opportunity there. So, that's kind of another thing. Both oil and gas specifically, you do want to have those experts. It's not real estate, in my opinion, from me being a commercial real estate broker and an investor, where you can just kind of figure it out, right? Like you could put a lot of money into something, maybe trying to buy an oil and gas company and realizing that's an absolute dud because you need the geological survey, you need the petroleum engineer, you need the geologist, like kind of stuff. So, definitely buyer beware,
Yeah.
partner with the right people, right? That's the difference maker.
Well, there's definitely more of a sophisticated science behind oil and gas as opposed to
Yeah,
real estate, right? Real estate is just not as heavily immersed around the sciences, you know.
for
There's
sure.
like what materials engineering involved, petroleum engineering, all those good things. So
All
it
the
makes
good
sense why
things.
you need a higher level of sophistication and assessment, right? Before really making a sound decision.
Yeah.
Which leads us to our last and final discussion point that you want to share with the audience.
Yeah, so that's kind of the big thing I found, right? So as I've invested in things as, say, oil and gas, or maybe it's private equity or debt or commercial real estate, list goes on.
Yeah.
Having a CPA who actually understands where that goes. So, for example, this is one that I tend to find that CPAs don't fully know. The shortest way to explain is the difference between oil and gas and short-term rentals. If you're
Hmm.
a high income earner, maybe CEO or a corporate employee, you have a lot of taxes that you pay. And there's really two ways that are typically done to offset taxes, but one isn't known, and that's really oil and gas. People are buying a lot of short term rentals and then having to basically create themselves a second job to offset taxes because they need what's called material participation, which is over 500 hours. You can't have a job while you do it, and you
Mm,
also need to ensure that you are more participating more than someone else, right? So you can't just hire a property manager and be like, oh, I did my hours IRS. Like you need to do more than someone else, right? That gives you the ability to offset your active income, right? Otherwise, you could just take passive losses and offset passive income. So again, if you have high income from a W-2 corporate business setting, this is imperative. The other piece is going to be oil and gas because you could just invest in an oil and gas project and through what is called direct working interest, you're able to offset active income. So, for example, a week and a half ago, I was talking to a CPA who I very much admire, and I was like, man, this guy knows everything under the sun. I might want to switch to his firm, right? And then we had this discussion about direct working interest. She's like, no, you can't do that to offset active income. And it's like, hey, for the CPAs I've talked to and the tax code, at least that I've read, right, which is the same of what she's read, that says otherwise. Now, he's the CPA, so obviously, like, he, has that accreditation and that sort of knowledge base, right? But yeah, again, just through me triple checking and coming back, he's like, wow, okay, that's really interesting that, I know that, right? So, meaning to say that it's not a fault for him for knowing this like one small thing, right? Because the tax code is absolutely bonkers, right? And he's very
mm,
capable. He's a great firm. Think the world of him, all great things. What I'm saying ultimately is like if your CPA does not understand oil and gas in general, let alone that one small piece, right? Or real estate or these other things, and they're not aware of it, they're ultimately hurting you. So I've seen individuals
yeah.
who stay with their CPA for decades and their wealth has, quadrupled or, tenfolded. And yet they're still having the same kind of conversations. Like if your CPA is not helping you with tax strategy, possibly with
Hmm.
bookkeeping, maybe even like, a fractional CFO with your company or maybe even with yourself, and you're a high income earner, those are just huge gaps that you're missing. And yes, they do cost this thing called money, but they also are investments in this thing called time and opportunity. So that's like the last thing I'd really say is yes, sure, make sure your CPA not only understands alternatives and has
Hmm.
other individuals who are at your similar income level, right? But it's also making sure that they have the capacity to help you, and ultimately that you are also allowing them to help you if they offer tax strategy. Have them have conversations with you here in Q3 like we are, right? Or in Q4. So
Hmm.
you're prepared to know what you're going to pay in taxes and estimate so you can make decisions this year. Because you cannot go January and say, oh, let me go do something to offset taxes last year. It doesn't work. Like that's an IRS thing. That's not even like, Paul says, right? So being able to be proactive on these things again is treating your money with the love and tender care that it wants, and you
Hmm.
want for it. And really that's just going to be with a good CPA who understands and has those services for where you're at but also like where you're going too, right? Especially if you're doing
Yeah.
some of these bigger types of investments, they're really going to be able to help you and work. If you have a financial advisor, work with them too. But again, completely offsetting your taxes and paying no taxes. I mean, we're talking 20, 30 plus percent just like income back in your pocket. In addition, for example, if you did oil and gas, like I mentioned, like you also have the passive piece too. So, we've talked, like we've seen how people have invested in oil and gas, save that chunk of money, then go, spend on education or go spend maybe on a vacation or a car, and then take that cash flow and do kind of the same thing, right? And really give the ability for yes and instead of just, oh, let me go do this program and maybe make money or do, this vacation. It really gives you the ability for both. And I mean, both sounds pretty good to me. So,
Absolutely, man. And so obviously we have covered a lot of ground in our podcast series and trilogy. The
yeah.
biggest takeaway for me, right? And I kind of want to make sure we have this one big takeaway, is that coming from the real estate space, specifically commercial real estate,
Yeah.
you seem that you're very passionate, more so, right? Having learned about and being involved now with the oil and gas industries, is that the number one thing that stands out that if I recall correctly, is that as opposed to real estate, you can not only offset, right, taxes, but you can
Hmm.
offset active income as opposed
Correct.
to just passive income. And
Yeah.
I just want to make sure we end on this note here. When you say that, are you saying that through oil and gas investments, typically, you're expecting the distributions to basically be equal or more, right, to your high income salary? Like, is that what you mean by you can offset against it in an active way?
Yes. So offsetting your
Okay.
active income of high income salary. Example, you're a
Yeah.
CEO, you make $2 million, right? So offsetting that taxes, right? Or you're a corporate employee, you make 400 a year.
Hmm.
Offsetting those taxes is exactly what that means in terms of offsetting that, active income. And then, I mean, you're mentioning kind of returns wise. I mean, yeah, real estate, oil and gas, very different. Real estate tends to be 6 to 12%, if you will. Granted, it depends residential, commercial, all these different factors, but I'm just, making big kind of assumptions based on what I've seen from the market and also what people have told me. So it just depends. But oil and gas wise, like you could see 10%, you can also see 30 plus percent. And that's also not wildcatting. Like you can see healthy 20 or 30% type of annualized returns, typically
Hmm.
paid monthly, because of some of the types of investments, at least that we work
Yeah.
with, right? Where it's an
Right.
existing well and you're adding, increasing the operations and making it
Yeah.
better. That equipment, again, is what offsets, which then produces more cash flow, et cetera, et
Right.
cetera, et cetera. So 20, 30% oil and gas like is not uncommon. And so again,
Hmm.
I have some people that are in the real estate space as professionals or investors or what have you, and they allow oil and gas to really be in their portfolio to offset taxes, to give the
Right.
cash flow to then do this other stuff. So again, it's kind of like this arbitrage thing. So
Hmm.
I love real estate through and through. It's also, again, a yes and like real estate helps build, preserve wealth. Oil and gas is a fantastic opportunity to offset and specifically do it passively. So that way I
Right.
don't have my phone blowing up trying to do $50 tasks when I'm on
Hmm.
calls trying to do 5,000, 50,000, etc. type of, 1 hour conversations that sure I saved a little bit of money with the real estate or maybe I'm building wealth. But again, if I'm distracted from the things that are kind of serving, it's really preventing me from doing the things that
Of course.
greatly serve me. So,
Yeah. No, no, revenue generating activities, the
yeah,
Pareto principle, right? 80/20. Focus on the
amen.
20% that generates the best 80%. And I
Yeah,
just really want to make sure, I nailed this aspect down. When you
yeah.
say oil and gas can offset your active income,
Hmm.
this goes back to when you were talking about real estate, right? How like if you want to be considered like official in that category, you have to actually leave your day job because you're going to put in more hours
Yeah.
than that other person, right? So that you can, I don't remember the term, but you can
Yeah.
like capture that
Material
requirement,
participation. Yeah.
material participation.
Yep.
So what
Yes.
you're saying is you do not have to have material participation in oil and gas.
Nope.
And of course, you get the tax benefits and you get higher returns from a cash flow standpoint.
Yep.
So.
Yeah, because like with my short-term rentals, for example,
Yep.
I have a log of
Yep.
like the hours that I put with it, right?
That's
To
correct.
show
That's
the
correct.
IRS that blah blah
Yep.
blah.
Yep.
Versus oil and gas, like I sometimes
Yeah.
forget I have it, right? And as
I
again, high
it
income earner,
yeah.
my brain space is, worth
Well,
so
well,
much more.
you're telling me it's like more required labor on the real estate side. It's like
Yeah.
a requisite. It's a requisite.
Literally babysitting. Yeah. So
Yeah.
unless you
Yeah.
have like a real estate portfolio and you are
Hmm.
what's called a real estate professional, and you
That's
can
right.
look up in
Yeah.
terms of what of those requirements are, because there's real estate professional is one sense, right? And then you have the short-term rental loophole where you have material participation.
Uh-huh.
And then again, you could do a cost segregation. You could do these some other things within real estate, but ultimately,
Yeah.
from a time standpoint, if you have a portfolio of properties and you're a real estate professional, you probably are going to stick to real estate, for those types of reasons. But again, if you don't necessarily have the time or you want to have a big portfolio, and I
Yeah.
mean a dedicated portfolio, not just like I have two properties, but like you
Right.
only do real estate. I think the real estate professional status is that you have, I think it's like 750 hours a year, and you have to do more than 50% of that than any other activity kind of thing. Again, being that you can't have a corporate job type thing. So oftentimes,
Hmm.
again, business owners making good money, high income earners at corporate making good money.
Hmm.
It's just giving them those options. Yes, totally. The 401k and the matches and the IRA totally do some dents, but
Yeah.
there's a difference between a dent and like a ginormous meteor that just like slings from
Right.
outer space that come in and just completely demolishes it. Because like we have
And
people who ultimately don't pay taxes each year because they're just more strategic with their funds.
yeah, and when it comes to even like commercial real estate, the highest level would be the CCIM people, right? Which needs at least like 2 years minimum, if I recall correctly,
Yeah,
just
and
to get
getting
that
that certification.
certification.
Yeah,
Yeah.
yeah,
Yeah. So that's another aspect of I guess being technically sound
yeah.
and in the right impression for the IRS.
Yeah, for sure. Because ultimately, it's not something that you should really play with. Because ultimately, if you cannot distinctly show that you like have something, you can't
Hmm.
claim it. Like this isn't a
Yeah.
oops, sorry, I forgot. Like this is written
Right.
tax
Right.
code, and your
Yeah.
CPA also has their license on the line where they are public accountants. They actually don't really technically work for you. And I don't really want to go down this rabbit hole, but essentially it's the idea around they are just like a lawyer, right? Like they need to
Mm,
adhere to certain things. And in order to
sure.
stay practicing, like
Hmm.
they can't just fudge numbers and pretend it didn't happen, right?
Yeah.
Because ultimately they're not going to have a business job lifestyle. So
I
you
think what you're trying to say is they're not only there to serve you, they are there to in a way serve as an intermediary, right,
correct to
between the
interpret.
public as
Yep.
well as the government entities.
Correct. They're helping
Yeah.
to basically translate
Yeah.
government tax code to the individual, and the
Hmm.
individual it's up to the individual's responsibility to report correctly for the CPA to then do their job. Like this isn't on the CPA. This is also something I learned where I was like, oh, it's a CPA. They messed up. It's like, no, it's actually you. And
Right.
so ensuring you have the right bookkeeping and process. And again, this
Mm.
point of like have the right CPA. So yeah, if people need another CPA with the Octane CPA group, we have a number of great CPAs that can recommend individuals to.
Yeah, man. Listen, Paul, it's been a great time talking to you, learning from you. If the audience wants to get a hold of you to learn either more about oil and gas investing or the Octane Group where you train CPAs, what is the best way to get a hold of you?
Yeah, I would say through LinkedIn. Paul H. Graham. I live here in Nashville, and there you'll be able to download a number of things. I have access to like the oil and gas investor book. You can share with me like that you found through the show, right? So both of us can be like, oh, awesome, that's so great. What was your favorite part, right? And reconnect about those memories. And then yeah, just happy to connect anyone or really help anyone with connections or information to help them in their journey, either investing or, like I said, with CPAs as well.
Yeah, man. No, I love it. I love it. That's what this is all about, right?
Yeah,
So, Paul, listen, thank you so much for your time.
yeah,
I know it's getting late over there on the East Coast, and hopefully, maybe we can run into each other in person during some business events and get-ups and whatnot. But in the
got
meantime,
it.
you stay safe. I know Nashville is a big music location and
It
music
is.
plays. Or do you participate yourself with jazz or?
I have some songwriter and artist friends that I get to watch them be very excited about and
Mm,
experience their career. So it's just such a cool thing. And the biggest thing that I've learned from being in Nashville is this. I, as an entrepreneur, right, do the oil and gas, do the CPA. Like I've done these entrepreneurial things. The idea of being an artist, like a true artist who is so in their craft that they maybe go write songs or write books or, are a musician, like they could write 1,000 songs and none of them could turn into a single dollar, but they do it for like the love of it and just a
mhm.
completely different like belief in terms of entrepreneurship. And so, as kind of a concluding thought, at least for me, like that has been such an amazing, wonderful gift in the times where I'm like, I'm not sure if I could do this or whatever maybe self-doubt or situation that might come up, I'm like, oh no, like I need to like just different more, right? Like be the creative artist, right? It's just been so cool to see some of my friends do that. So
Yeah.
yeah.
Well, listen, they always say, according to success principles, that the desire to give up is usually the strongest right before your biggest breakthroughs. So
Mm.
hopefully, next time if you ever feel that way, you
I'm
remember
gonna think
that
of you.
little,
I'm gonna be like,
yeah,
no, I'm gonna
remember that
do
little
it.
goat nugget and get excited instead and really lean into it.
Love that. No, it's a
Yeah.
great idea to keep in mind. Absolutely.
Yeah, absolutely. No, and it's so important to have that passion because I mean, listen, I got into business because of basketball, and
Yeah.
it's now allowed me to do all the things that I want in the basketball world, right? So
Yeah.
that is the fire that keeps everything running. And
Amen.
if because passion is like the best remedy to
Yeah.
giving up, and to overriding any ups and downs that you may be experiencing for that
Absolutely.
day
Yeah.
or
Just the
whatever time period.
entrepreneurial roller
Yep.
coaster. Yeah.
Yep.
Yeah. I
Yeah, man.
agree.
That's why I love having these talks because
Yeah.
it helps you learn about not only the nitty-gritties, but reminds you of the principles that you need to adhere to, right, for
Yeah.
success in life and entrepreneurship. So, Paul, thanks
Absolutely.
again.
You
I
bet.
will
Thanks,
see
Phil.
you around and you have a great evening,
Sounds good,
okay?
brother. You too. All the best. Take care.
All right. Thanks, man. Take care.